Hello, I'm Paul Raftery, and I'm the CEO of Projects RH, based in Sydney. Today I'm joined by Christian Raftery, CEO of Jade Capital, based in Singapore. And we are going to discuss the global financial system and its security, and will we suffer from contagion? Hi, Christian.
Hi, Paul. Thanks to be here.
Would you tell me a little bit about you?
Well, as you know, I'm running a small business here in Singapore, doing consulting to a lot of banks and fintechs in the compliance space, and looking at also startup businesses.
So, in your work, you're seeing the implications of what happened in these bank scares. I mean, if we go back, the whole issue emerges from central banks trying to keep the domestic banks giving money to businesses during COVID 19. And now, effectively, they're trying to get some of that money back. And they're also trying to reduce the impact of inflation by increasing interest rates. So, globally, there's a concern about where the banks are going. I mean, what's the real concern about inflation?
Well, I think what you just highlighted there, it's really important to note that the SME sector and the institutional sector are facing the same issue here with inflation. What the SMEs that I'm talking to, and even the larger sort of medium enterprise companies, are having issues with controlling the inflation risk in their businesses. And part of that means that the investment that they receive, or the ongoing investment that they receive, can be affected, where investors are actually moving their risk profile or their investment timelines lower down the normal investment rank. So where you have a normal Series A or angel investment even, they may be waiting for a Series B to ensure that companies may make it through, that these are real viable products to invest in. And so the part of the issue you have here is it moves into the inflation cycle, because you've got this general open market risk-off sentiment that's occurring. And as a matter of that coming through, we're actually seeing the inflation increase as the money supply decreases, meaning that goods are becoming more expensive, talent is becoming more expensive, particularly in countries we've seen like in the US. You're seeing that happen in here in Singapore, you're seeing it in Hong Kong. I'm sure it's occurring in Australia, and it's having a wider effect across all industries. As a matter of course, then the banks are seeing this as well. And what you're seeing is the central banks trying to control this through an interest rate rise to cool some of the inflation. However, they've got a very delicate balancing act going on here. And again, it's a very circular motion at the moment, because a lot of these smaller businesses that are trying to start up and get capital are unable to achieve the capital requirements they need to keep going or to expand.
Well, what we're seeing in Australia is that those entities are not attractive to banks. They're actually telling them effectively to go to non-bank lenders, because what's happening, as far as we can see with the major banks, they're very busy refinancing their balance sheet so they can repay certain loans that they were forced to take by the government to support business during the COVID years. They now want those loans effectively repaid so that they can repay their own loans. And the banks seem to be focusing on raising more money in international markets, which has been a historic thing for Australian banks. And during COVID, it got to a historic low. But what we're seeing is that interest rates are going up, but the availability of money is going down. So what are we going? Is that going to lead to problems in the economy? Are our banks stable?
I think our banks, particularly across APAC, are fairly stable. There are very stringent regulatory requirements for tier one capital across the banks, and we're seeing that that's not really being tested, but rather the regulators are strengthening these requirements for the banks. So the banks are are quite strong in the APAC area. I just wanted to pick on one area to highlight, though. You talked about this idea about larger companies rebalancing their spreadsheet, rebalancing their books, and I think it's really important to note this is actually, people may not have heard of it like that, but they are definitely hearing about the layoffs that are occurring in large tech companies and in banks, and this is a symptom and a way of sort of easing that pressure internally, as we see these big businesses looking at their long-term future and looking what is the best way for them to be keep their products online, keep themselves going, rather than injecting capital into it. These are short-term solutions, as we know that this only lasts so long in businesses. There are requirements for talent to continue, and this doesn't exclude banking. Banking does need those people there. But to answer your question, I really do think that our banks are quite strong, and if anything, the regulators have gone to strengthen the banks even further.
So, from a regulatory perspective, what happened with Credit Suisse in the Tier 1A securities going into sort of like a first loss reserve? I mean, I would have thought the central banks said that's what they're for. What are you seeing in the results around the world, though?
I think the Credit Suisse scenario is a bit unique, and you saw the banks tested in the US. I wouldn't mind just mentioning that the Silvergate and the Silicon Valley Bank scenarios. Again, this is the testing of those banks. Outside of APAC. And you saw the Fed Reserve step in the US, essentially guaranteeing all the accounts to stop such panic occurring. And you saw the Swiss regulator essentially step in with Credit Suisse as well. Provide the loan in order for UBS to buy Credit Suisse, the business as it is. To stop the panic.
In the UK, you saw the Bank of England lean on HSBC and say, go buy the local branch of Silicon Valley Bank. I mean, yes, so they're not going to allow anything to happen. And I think that's really good that the population should see this rather than what we're seeing periodically in the press is this scaremongering. I don't think the contagion is going to happen. I don't think that's what you're saying.
I think the real important thing to note here as well is in all the examples we've talked about, all these banks do have tier 1 capital. It is simply the liquidity issue that it's occurring here. It's that they have the assets on the books. It's not like other scenarios where they don't have these assets. They're simply already invested, and the cost of unwinding this would be unfavorable to everyone involved in the process. So from the regulators to the customers of the banks themselves. That this is the key driver here. It's not so much about the asset, they don't have the assets, it's a liquidity issue as well. And I think that's what you're seeing with Silicon Valley Bank. They were selling their assets for cents in the dollar to get liquidity. It wasn't a matter of they didn't have the assets. So I think, again, the banks are secure. The regulators are, sort of monitoring these situations quite carefully, and it's a global phenomenon now. It's not something isolated to the US or to the Swiss banks. I think you see this across the board. The regulators are, sort of testing and communicating quite regularly with their, domestic counterparts at the banks to make sure and ensure that customers are safe, that these deposits are safe, and that the system in general is the banking sector in general is quite safe to ensure the security of the economy.
Christian, is the implication if the banks are focused on refinancing themselves and interest rates are rising, that we're going to talk ourselves into a recession?
Well, I think recession is definitely something that a lot of people are talking about. I mean, I know that the US is talking about recession. but they're talking about a short dip recession. So I think it's really important to note so that, if it is going to be a recession, what kind of recession do they want to have? And I would say at this point, it looks like a short-term recession if there has to be a recession at all.
So a correction rather than a recession.
Yeah, the correction as well. I do see there be a short. Again, I alluded to this risk-off sentiment that's happening across the world, which makes all kinds of markets, slow down. But I do see a longer-term scenario where this does ease off. But again, we keep coming back to this idea of the central bank balancing its interest rate requirements with inflation, and that has global implications. And you are seeing some countries now looking to move away from the US dollar as their denominated currency for transactions, because they are seeing that there are some potential issues in the short term, and they don't want to be pegged to those issues anymore. So I think that's more of a risk, actually, is that people start moving away from centralized currencies. That presents a bigger issue than sort of some of the.
Christian, where are they moving to?
Well, there's some countries that have started looking at using other currencies. So, for example, I think there's a recent in the news. I've forgotten the name of the country. There's a BRICS. I think it was Brazil, India, and a few other countries were looking at creating their own basket of currencies. Right. So this may be a way forward. The only problem with something like that is how do you actually peg that correctly, and what are the underlying assets for creating a new currency itself? Again, it adds a number of regulatory issues for banks at the moment, where we know that the economic, global economic situation is uncertain in the short term. In the longer term, it looks a lot brighter. So I'm not sure that right now is the correct time to be creating a new currency. But there are a number of countries that are looking at doing this as well. So it's something definitely to be aware of. But in terms of what's going on there, I would stick to the sort of the tier one banks in terms of the global trade. And what we're seeing there is, those banks are well capitalized. They have their tier one capital requirements met. They're showing the regulators constant stability. I don't foresee a longer term issue with that. I do see recovery in the longer term.
We're seeing a number of transactions at the moment which say, and the transaction will be done between parties. Both banks shall be members of the top 25 in the world. And whilst that's often taken for granted, it's actually now in the correspondence. So yes, everyone is looking for quality. Well, thank you very much for your time today, Christian. It's been, as always, valuable to speak to you.
Thanks, Paul.
Thank you, ladies and gentlemen. Goodbye for now.